Have you ever wondered why some people are obsessed with gold, while the whole world runs on dollars? It's not just an investment choice. It's a centuries-old financial rivalry, a clash of two titans for the title of the ultimate store of value. On one side, we have the mighty US dollar, the king of modern finance. On the other, we have gold, the eternal metal that has captivated humanity for millennia. This is the story of their epic battle, and what it means for your money. So what's the core of this conflict? It's a classic showdown between two fundamentally different types of money. Fiat currency versus commodity money. The US dollar is what we call a fiat currency. Its value isn't backed by a physical commodity like gold or silver. Instead, its value comes from the full faith and credit of the US government. Think of it as a promise. We all accept it as payment because we trust that the US economy is stable and that the government will honor its value. This trust is what gives the dollar its power. On the other hand, gold is the original commodity money. It has intrinsic value. It's beautiful, rare, and incredibly difficult to mine and refine. You can't just print more of it. Its value isn't based on a government's promise. It's based on its physical properties and its scarcity, which have been recognized across civilizations for thousands of years. It doesn't need a government to tell you it's valuable. It just is. Let's first dive into the reign of King Dollar. Since the end of World War II, the US dollar has been the world's dominant reserve currency. What does that mean? It means most international trade is conducted in dollars. When Brazil sells soybeans to China, the transaction is often priced and settled in dollars. When countries borrow money on the international market, they usually borrow in dollars. Central banks around the world hold massive reserves of dollars to stabilize their own economies and facilitate trade. This dominance is reinforced by the petrodollar system. In the 1970s, an agreement was made that oil, the lifeblood of the global economy, would be priced in US dollars. So, any country that needs to buy oil first needs to get its hands on US dollars, creating a constant global demand for the currency. The biggest advantage, and perhaps the biggest risk, of the dollar is its controlled supply. The Federal Reserve, the central bank of the United States, can essentially create more dollars out of thin air. This is called quantitative easing, or more simply, printing money. This ability gives the government immense flexibility to stimulate the economy, fund its operations, and respond to financial crises. But there's a catch. When you increase the supply of something, its value tends to go down. This is inflation. The more dollars that are printed, the less each individual dollar can buy. Your savings lose purchasing power over time. So, the dollar's strength is entirely reliant on the world's trust in the US government to manage its currency responsibly and keep its economy strong. Now, let's turn to gold's enduring appeal. While the dollar's reign is less than a century old, gold has been a symbol of wealth and a store of value for over 5,000 years. Its power comes from its physical nature. It's a hard asset. You can hold it in your hand. Its supply is naturally limited. All the gold ever mined in human history could fit into a cube roughly 22 meters on each side. You can't just press a button and create more. This finite supply is what makes gold such a powerful hedge against inflation. When governments print more money and devalue their currencies, the price of gold, when measured in those currencies, tends to rise. It preserves purchasing power when paper money fails. This is why gold is often called the fear index. During times of economic uncertainty, political instability, or war, investors and even central banks flock to gold. It's seen as the ultimate safe haven asset. It has no counterparty risk, meaning its value doesn't depend on another party's solvency or promise. A dollar is a liability of the US Federal Reserve, but a gold coin is an asset that stands on its own. It's a form of financial insurance against chaos. When people lose faith in governments and financial systems, they put their faith in gold. This rivalry wasn't always so direct. For a long time, the two were actually linked. Under the Bretton Woods system established in 1944, the US dollar was pegged to gold at a fixed rate of $35 per ounce. Other major currencies were then pegged to the dollar. This made the dollar as good as gold, because foreign governments could, in theory, exchange their dollars for a fixed amount of US gold. This system provided global financial stability for decades, but everything changed in 1971. This was the year of the Nixon shock. President Richard Nixon, facing rising expenses from the Vietnam War and a drain on U.S. gold reserves as other countries cashed in their dollars, unilaterally severed the link between the dollar and gold. He closed the gold window. From that moment on, the U.S. dollar became a purely fiat currency, floating freely on international markets. This event formally ended the gold standard and unleashed the modern era of their rivalry. The dollar was no longer anchored. It was now competing directly with gold based on trust alone. For the past 50 years, the dollar has reigned supreme. But today, the king's throne is starting to look a little wobbly. Several major challenges are emerging. The most talked about trend is the dollarization. Major global powers, like China and Russia, are actively trying to reduce their dependence on the US dollar. They see the dollar's dominance as a source of American geopolitical power, allowing the US to impose sanctions and control the global financial system. We're seeing the rise of alliances like BRICS Brazil, Russia, India, China, and South Africa are exploring ways to trade with each other using their own local currencies, bypassing the dollar altogether. While the yuan or the euro aren't ready to replace the dollar overnight, this gradual shift is slowly chipping away at its unchallenged dominance. Another huge concern is the staggering level of U.S. national debt. When a country accumulates massive debt, it creates an incentive to devalue its currency through inflation to make that debt easier to pay back. Seeing this risk, central banks around the world, including those in the BRICS nations, have been on a gold buying spree. They are diversifying their reserves, moving away from holding only U.S. government bonds and increasing their holdings of physical gold. In 2022 and 2023, central banks bought gold at a historic pace. This isn't just a market trend. It's a strategic move by nations to hedge against the long-term risks of the US dollar system. So, what's the final verdict in this epic battle? Is gold going to replace the dollar and send us back to a gold standard? Or will the dollar crush all challengers and maintain its global throne forever? The reality is probably less dramatic. Gold and the dollar are not necessarily mutually exclusive replacements for each other. Instead, they are evolving to serve two different, but complementary, functions in the global financial system. The US dollar will likely remain the world's primary currency for transactions and trade for the foreseeable future. It's simply too embedded, too liquid, and too convenient to be replaced easily. You use it to buy coffee, to trade stocks, and to conduct international business. It's the money of commerce. Gold, on the other hand, is reasserting its ancient role as the money of trust and the ultimate reserve asset. It's the foundation. While you don't use it to buy groceries, it acts as the bedrock of the financial system, a hedge against the failures of fiat currencies. It is the asset you own when you want to protect your wealth from the very system that runs on dollars. So, the rivalry isn't about one destroying the other. It's about a rebalancing. As trust in the fiat system wavers due to debt and geopolitical shifts, gold's role as a stabilizing force grows stronger. They coexist, one for daily use and the other for long-term security. The dollar is the king, but gold remains the god, a timeless store of value that will likely outlast any single currency or empire. Understanding this dynamic is key to navigating the future of finance. Thanks for watching. If you found this breakdown interesting, don't forget to like this video and subscribe to the channel for more deep dives into the world of finance. See you in the next one.